Hello everybody, welcome to ULTradez. I wanted to make a quick video this morning to go over my kind of updated strategy for how I play the open range break in gold specifically. The same basic principles apply to oil, but not as cleanly, at least recently. So if you watch my live stream at all, you'll see me do this every day. I'm still dialing in getting my entries right, but I wanted to make this video just so that I could outline the strategy that I'm following, just if you have any questions about that. So essentially what the strategy relies on is very simply the first 15-minute range that's created from, it's 8:20 Eastern time till 8:35 Eastern. So I'm in Central time, so all my charts are going to show 7:20 to 7:35. You can adjust it for whatever time zone you're in. And then I am looking to take an entry off the midpoint of that range. So whatever that range in that first 15 minutes is, whatever that, I look at the midpoint, and I have an indicator on my chart that just plots that out for me. I'm looking to take an entry off of that midpoint, and then I'm looking for 100% of the range. In other words, I'm looking for price to break out of the range and then move, basically take a measured move of the range up or down, depending on which direction it is. And it does this basically every day. I mean, probably 9 out of 10 days it does this. The trick though in gold that I found is that sometimes it'll fake you out a lot first before it actually makes its move. So sometimes it takes 2 or 3 entries to catch that move. But when it comes, you know, it comes pretty strongly, and you know, you can get some nice moves out of it. So ultimately, this entry could also be used to catch trending days. In most cases, if the day turns out to be a trending day where it moves, you know, sometimes 200, 300, 400 or more % of the opening range, those entries can be taken off that midpoint. If you look back where the run started, you could have got in off that midpoint. So long term, I'm looking to really catch those long moves, but sometimes those take a couple hours to play out. So while I'm working up to that, my sort of initial target is that 100% mark. So let's jump into the charts and take a look at some examples. So the chart we're looking at right here, this is today, which is the 22nd of April, 2024. And if you look at price today, we're on a big kind of downward trend. All right. You'll notice the only thing I have on my chart is this opening range box. I also have the overnight open, which is the price that it opened at, you know, it's 5 o'clock Central time, 6 o'clock Eastern time. And then from there, we just dropped. So today, as an example, we dropped, you know, from that opening point to, let's say, the midpoint of our range right here, 428 ticks, almost 43 full points, which is that's a huge move, right? So we're definitely downtrending. That's pretty obvious. Now you don't have to know the trend in order for this trade to work, but knowing the trend helps. Now, I'm going to go over the basic entry first, and then I'm going to show examples of kind of red flags or signals that the market gives you to be cautious. Okay. So the open range forms in the first 15 minutes of the day. You see price comes up. It forms the top of the range right at the end of that 15 minutes. So that's the candle that closes at 7:35. From there, it pushes down. Now, the entry criteria, the very basic entry criteria, is you're looking for price to come from the top or the bottom and retest the middle with space. Okay, so it would have been better in this case if price had like kind of pushed past that opening range in that first candle. I never take an initial break. Okay, I'm not putting my order at the top of this waiting for it to break out. Sometimes that works, right? If you look at the bottom here, if you would have had your order right here, yeah, it filled you and it ended up dropping. That's great. It doesn't do that all the time, and I've been burned more often than not by playing it that way. So unless you're willing to kind of ride some drawdown, I wouldn't recommend it. It's not how I trade it. So my entry here would simply be, we come back, we retest this midline. This is an up close candle, so the entry would be a break of this up close candle right here. Stop loss would be one tick below that candle because this is kind of the pivot low here. I'll show you some other examples where the stop could be placed someplace a little bit differently, but in this case, that's where it was at. And this was a failing trade. When I come back and go over some of the things, some of the red flags, I'll show you a red flag in this trade that should have kept me out of it. But we took it, and so we took, I think, a 14 tick loss. Okay. Price comes down, it fells the bottom, and we get these little like one candle retests. Okay. So this is, I did not take this trade, and I don't trade these often because they're a little trickier to read. But this is what I would call a midline wrap. Okay. Price comes below, we close, this down close candle closes below the midline. The next candle closes above the midline, and then price falls. Okay, so this would technically be a valid entry. This isn't one that I take all the time because there's some other things you kind of have to be looking out for. But in this case, the trend is down. There's some other indications the price could be coming down. This would have been a perfectly acceptable entry, and it ends up falling through. We can draw some extensions on to see if we hit that 100% level. And this is simply a Fibonacci extension that I've adjusted to just show the range, right? So we have the full range here, and then these negative, right? Negative 50% is half the range. Negative 100% is equal to the full range. So that would have been the target. So the entry to the target would have been a clean 99 ticks. Okay, so that's $99 per contract, per mini. So that's essentially the entry. Okay. Now, an alternate entry would be a retest of either the high, the low, or the midline, right? So if price had come back up and tested the midline, that would have been a perfectly good entry. In this case, we came up, we tested the bottom of the range. I did not take this trade because the stop would have had to have been above this candle. Actually, the stop would have had to have been here. Okay. You always want to look at where your pivots are because gold is pretty manipulated. So you'll see this a lot where it comes up one or two ticks above a previous high or below a previous low and then rips the other direction. So you always want to take a pivot. So your stop would have needed to be above this pivot here. All right, so let's call it, let's just draw a line here. So this would have needed to be the stop for an entry break below this down close candle right here. Okay, so the total risk for this would have been 36. Again, target would still have been 100%. Looking for it to come back down to that 100% mark. I mean, you could have been looking for more, but that would have been what I would have been looking for. So this would have been roughly, 40 ticks of profit. It ended up falling lower. It did come down to this low here, right? So could have got more, but the reason that I didn't get into that was I wasn't willing to accept basically $380 in risk on that trade. So I did not take it, but that's a perfectly acceptable entry. You can see later on today, we retested again. And this would have been a good entry, which worked. Okay, now why wasn't this a good entry? Well, I would not have entered off of this because one of the other things that I looked for, I would not have entered off of this, but I would have entered off of this. No, I didn't because I was actually in an NQ trade, but this, entering off the break of this candle would have been fine because this is a reversal setup where you have an up close candle, you have a wick up and a pullback. Even though it's a doji candle, I still look at that as a nice reversal. The other thing is the stop loss is tight. Okay. So the stop loss would have had to have been above this candle, this wick here, because this is the next pivot high. Oh, right there. And let's say our entry was 1 tick below that. So 14 ticks of risk, perfectly acceptable for us to come back down. Again, to that 100% line, which we got. Okay. So those are the very, very basic entries. Retest of the first test, or a retest of the midline, or the high or low of the opening range. Oops. And then add to that, especially on a retest. If it's a first test, maybe not so much, but on a retest, I want to see a reversal pattern in the candle formation. Okay. Let's go look at another day just to get some more, get another example. Because again, this happens like all the time. All right. In this case, we have the overnight open that's in the bottom part of the range, which makes it a little trickier. But let's just walk through price as it happens, right? So we have the open range is formed from 720 central to 735 central. In this case, we have a little breakout, right? So we break out. So if you'd have had your order to go long right above this opening range, you would have been stopped out. That's why I never do it, right? Instead, we come down, we test the midline. All right, so I don't care whether the candle testing the midline is a down close candle or an up close candle. Can work either way. But I would take the break of the candle that tests that midline, which would be 1 tick above this down close candle. Here, let me make these a little wider. Probably be easier if we did that. All right. So my entry would be 1 tick above this candle. This trade I did take. You can go back and look at my live stream. And this one got stopped out for break even because we did break through the open. Okay, but it was a failed breakout. And we were 17 ticks from that point. It was a failed breakout. And then what I'll do is I will move my stop to break even once we hit the top of the range. So once we have a candle close above here, I move my stop to break even. We come back out, I get stopped out for break even. Okay, which is perfectly fine. Again, we're looking for when it's going to reach for that 100% mark. And sometimes it takes some failed breakouts. Okay, we have a breakout. We come back down. I don't think that I took this one, but we have another test. And so order would have been above this candle because this is the first one that touches it. Can move it down above this one once this forms, down above this one once this forms. All right. Stop below this pivot here. Now, when we first look at potentially entering this, the entry would be above this candle. The stop would be below this pivot low right here. Okay, so a lot more risk associated with this one. Let's look at what that would be. So stop would have had to have been here. Okay, entry would have been here. So 16, well, that's not too much, right? 16 ticks. Anything less than 20 in my view is probably fine. We're getting 70, 80 ticks out of the trades when they work. In this case, if it does fail, it chops around, fails to really go anywhere, would stop you out down here. Okay. So we have one break even, one failed attempt. Then we come down to the overnight open. Now the overnight open causes issues. Price tends to pull to it, and once it gets there, it either blows through it or it gets hung up. In this case, it kind of gets hung up. I'm not really interested in taking, this would be an okay entry short. I probably wouldn't take it just because it's so close to the overnight open and I don't like the overnight open. But technically this would work. We have a break below. We have wicks we have a retest above. You know, you've got the overnight open, you've got the bottom of the range. You could take a break of the candle short and that falls. Let's see where our 100% line is. Boom, and it does hit 100%. Okay, so this would have been okay. I don't think I took this one. Pretty sure I didn't, but it worked out just fine, right? Because we're looking for a breakout and a retest and a failure lower in this case, right? Okay, well, let's look at what happens next. Well, we pull back in the range, and usually what happens is it'll pull back and it'll either retest and continue lower, or it'll push through the other side of the range. So here we have a push up. Now, this one comes up, touches the midline. Okay, but we are not going to take this because we're taking it into the overnight open. We do not take trades into the overnight open, especially when the overnight open is, you know, 2 or 3 ticks away. Don't do it. We push above the midline. All right, so now we're looking for longs because we're above the midline. We come down, we test the midline. We have space. It's a little bit of space, but we have space. We have 2 candles that did not touch. We have this candle that does retest. We take the break long. We move our stop to break even once it breaks out, and we get stopped out for break even over here if we hold out that long. I think I did take this one, if I remember right. I think I took this entry, and I did end up getting out. I moved my stop up because it didn't look like it was going anywhere, so I got out with a little bit of profit there. All right, we come back below. Now, the problem here is we have the overnight open. We're not going to take trades into the overnight open, so we're just going to wait. We never really have any kind of a retest up. I do take this trade here. Okay, so we break above the midline. We come back down, and I enter on the break of this candle. It would have been better to have it touch the midline. But because we had 2 kind of strong up close candles, I went ahead and got in here. Stop would be below this because this candle reached below the previous lows. Okay, so I would feel comfortable with a stop below this candle, and it ends up going long. I end up getting out early on this trade, I think, because the price movement while these candles are forming was very choppy, and I wasn't comfortable with it. So that's that day. And of course, I don't think I need to draw the lines here. It's pretty obvious that we reached that 100%. And actually a day, you know, this is one of these trending days, right? So, you know, not the best trending day, but it ends up hitting the 200%. It actually goes 200% from here. You know, so if you really just wanted to sort of hold it and see where it went, you know, you could have got quite a bit out of that. Yeah, let's look at 1 or 2 more days real quick. I don't want to make this video too ridiculously long. All right, let's see what happens on this day. The open range forms. We have a breakout. So now what are we looking for? We're looking for it to come back to the midline. We come back to the midline here. I think, I'm trying to remember if I took this trade or not. I don't remember. You can go back and watch. The entry would be above this candle. And this is where your stop gets a little tricky, right? I think I'm pretty sure I had my stop below this candle, which was 19 ticks. Got stopped out, and then it moved in my favor. What I didn't do at this point, which would have worked and would follow the plans, all right? Even though this failed, in the candle that actually took my stop out, we essentially had a retest of the midline, and we have a reversal pattern. Okay, so this is a reversal pattern right here. Okay, we have a down close candle, followed by a candle that reaches below the down close candle and closes as an up close candle without extending beyond the down close candle, right? So the up close candle has to form inside of the down close candle before it for this to be a valid reversal pattern for me. So the great place to enter would be to re-enter here at a break of this one, and then of course it runs. Oops, I didn't want a line, I wanted to measure. But let's put our extensions on here first. Boom, that's your 100%. It gets to it. So the entry from there to the 100%, that's 70 ticks, right? So your 70 would have more than made up for this 20 that you lost on the first attempt. And that's how this trade works, right? You may get break even, fail, and then it works. You got to kind of stay with it. You got to trust the process. Then we hit that. I think we had some news probably here that rocketed us down. I am not going to take an entry off of news. And it got kind of messy here. You know, technically this would have been an entry here because this candle here is the one that pierced the midline. So you could have taken a break of this candle. You would have got stopped out for break even, right? It didn't go to 100%, but then it came back up for another retest. Really choppy action. I didn't get in here because there's too much whipping around for me. This would have been a failure because if you had gotten in here, your stop loss would have been above this candle, and clearly you would have got stopped out at this point. Okay. 20 ticks. Now, ironically enough, it does end up failing from the midline, which again, this is really what I wanted to highlight here, is how often we hit this 100% level, and we hit it coming off of the midline. Now this entry was super choppy, so not a great entry point. You know, if you're just watching this play out, as these candles start to get tighter and tighter and tighter, we have all these wicks above. So all this is telling us the price could potentially come down. But it's not the obvious entry that we're looking for, even though it does work. And this one actually comes 200% of the range, right? So 138. So again, the important thing to recognize here is that we come from the midline to the 100%. You know, if you were super risky, or not even super risky, but if your risk tolerance was such that, you know, you didn't mind holding your stop till, you know, if you're getting in at the midline and you have your stop at the top or the bottom, targeting basically a 2-to-1, right? You're targeting 100%, you're risking 50%. So you're risking that much to make that much. You're risking 1 to make 2. That one would have worked. My risk tolerance isn't such that it allows for that, so that's not how I trade it. What hours of the day do I trade this? I only trade up until about 10 o'clock, right? So we're going to get that move usually between 8 Central and 9 Central or 9:30. Somewhere in here is where we get the move. This was the move on this day. And then we just kind of consolidated the rest of the day. So I don't trade it later in the day. This is a sort of morning session trade. Let's go back one more day. See how this works out. So this is another day where we have, oh, I took this trade too and I got stopped out early. Oh, I remember this day. This day kind of haunts me. So there's really nothing short here because the overnight open, again, is very close to the bottom of the range. So that's just too choppy for me. I'm not taking anything down here. Once it's done chopping down here, though, then we push up above the midline. We come back for a retest of the midline. I did enter here on a break of this candle right here. Boom. Move stopped. Here's where I screwed this up, right? So the rules would say move your stop to break even once you touch the top of the open range. So that was 16 ticks away. So once this candle closes, you'd want to move your stop to break even. And you can see it holds this whole time, right? We do come back for 2 retests. But we never come back to where your entry would have been. Draw the extensions. Whoop. There's your 100% in this candle here. Okay. So it was choppy, but we got there. And that would have been 68 ticks. Now I went further, but 68 would have been my initial target. Okay. Instead, I think I moved my I moved my stop, if I remember right. I think I moved it to like one tick below, or maybe, I don't know. I think I might have moved it to like this low or something. Anyway, it ticked me out right in this candle for a small profit before it turned around and went up. So that was a little disappointing. So you've got to be really careful with your stops in gold. Got to be willing to sit through some pullbacks. Got to be willing to have your stop, you know, at a pivot that's far enough away that allows it to move a little bit. Because it's going to move. It's going to try and chop you out before it goes where you know it's going to go. Okay. So that's what it does almost every day. You just have to wait for those entries. So again, the rules are we're taking a trade off of, we're looking for really ideally a breakout and then a pullback to the midline before it actually makes its move. We're looking to enter off of that midline after a nice retest and go long. So one thing that I wanted to show you, and this happened today, so it makes it pretty easy. Okay. So let's go to, I like to look at the 15-minute chart to get an idea of kind of what's going on. Okay. And I use fair value gaps. Let's see where we're at. Here we are. Oh, we're way over here. So a fair value gap is an ICT term, and it's simply the space between candles. So I look at what's the nearest fair value gap on the 15-minute chart. So the fair value gap on this 15-minute chart is the gap between this candle's low right here. Skip a candle, go to this candle's high, and that creates a gap. And if you'll notice, price in the open range is forming below this gap. Okay, so this is where price kind of fell through, right? There's no retracement up into this area in these candles. As opposed to something like, let's see. Well, something like this, right? So this was a down close candle. The next candle opens up and it pushes up and it closes that gap, meaning it reaches up to where this candle's low is. Okay. And then it does come back down. So there's no gap here, but there is this gap here. So you can see this, the open range is below this fair value gap, and then price is reaching up into this and then pulls back. Okay, so price is delivering out of a fair value gap and it's being pushed down out of this 15-minute fair value gap. So that should have been the reason, combined with the fact that we're in a very strong downtrend, to say, you know, we really need to be cautious going long. And that should have been my clue that I should not have entered here, right? Because this is this fair value gap. We pushed up into it. Essentially entering long here means that I'm hoping price pushes back up through this gap to get to the 100%, which it could. I mean, it's not to say it won't happen, but it's probably gonna be some resistance there. And the probability is that if we've already reached up in here and we have some strong downward momentum, it's probably going to continue short. So that should have been additional confirmation that what I should have been looking for is this confirmation right here where we wrapped the midline, close below, close above, and then we felled below. So that's the one big thing that I look for to keep me out of a trade. Or to give me added confirmation that I should get into it. Oftentimes, the 15-minute chart in these situations is unclear, and if it's unclear, then I take whatever the 1-minute chart shows me. But in this case, there was very clear evidence that the 15-minute chart provided, showing this wanted to come down, at least in the near term, and I should have paid attention to that. So that is my open range break trade in gold. Again, it works in oil basically the same way, but this has been flowing really nicely in gold, and this is what I've really focused on in my live stream, and that's why I kind of wanted to break it down this way, because I don't really break it down in the live stream. So probably not the best explanation. Let me know if you have any questions, but that's basically what I do every day. And ultimately, the goal is to try and jump on these, big trending days, which we have from time to time, where we really move, really get these bigger moves. Where's a good example of that? I mean, those are decent moves, but there's a big move. Some of these gigantic moves that gold has, like this day, for example, which had a super tight range, right? So we had kind of a breakout, 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 breakout. But look at this. When this takes off, when this eventually takes off here, where is it retesting off of? It's retesting off of this midline. Okay, and you see that over and over and over and over and over and over in gold. That's ultimately what we're looking for. I mean, this one, geez, went 328, right? So that's my long-term goal, is to be able to catch those. You catch one of those every couple days. If you catch one a week, then you're doing pretty good, right? Other days, you get this test and they just kind of don't go anywhere. But you see, it never pulls back on you, right? You're never really in jeopardy on this, even though it doesn't. There's no explosive move or anything. There's still the potential opportunity. If you sat in this to break even, worst case you'd be break even, but if you got tired of holding it, you could have still got out for 60 ticks, which isn't too bad of a day. Man, here we break down below. What's the problem here though? Oh, overnight open, so we're not taking anything down here. We come back above, retest. There's not really space, so maybe we sit this one out. Maybe we take it. If we take it, still works out, right? You never move your stop to break even because you never hit the top of the open range, and then whoop, it goes. Maybe you don't get in this one because there's no space. You get another opportunity, lots of space, a retest, and then the push off. And the push off. And then this one trends and trends and trends and trends and trends for the rest of the day. Okay. And where did it start? It started at the midline. So that's why we look for the midline. That's the strategy. Let me know if you have any questions. I'll let you know if it changes at all, but that's where we're at for now. So that's it. Have a good day, everybody. Bye.